I do think we're seeing a stabilization. The sort of contraction year on year is really a story of oil sector restraint, right? Saudi Arabia committing to these voluntary cuts, getting the rest of OPEC Plus to do so. That's a drag. Non-oil growth, yes, holding up. And we've seen liquidation of some of the foreign assets and a variety of things which suggests they'll continue to invest in projects. But I do think that this is a story of interest rates are still high at global levels, and Saudi Arabia is having to make choices among their mega projects. So I think stabilization, yes, but there's this real question about whether demand growth globally is going to pick up. And if it doesn't, for oil, the kingdom's greatest sort of revenue source, then we'll continue to see some asset sales and debt issuance as they try to continue the stimulus and direct investments. And I think that's going to mean the kingdom's is going to be more and more focused on investing at home and not so much investing abroad.
Rachel, we're seeing some real belt tightening now in the kingdom, some reprioritization of projects and some scaling back of those giga and mega projects as well. What's your understanding of what the federal fiscal gap is right now, and how much money does Saudi Arabia need to save to right the ship right now?
Sure. So part of the thing that we have to do when we're looking at Saudi Arabia, macro and government availability, is we look not only at the sort of government fiscal accounts, but also the public investment fund, right? This off-balance sheet spending has been an important driver, of these mega projects. But even the public investment fund, despite how large it is and the fact that it will likely benefit from some of the proceeds of this recent Aramco secondary offering, even they're committed to a lot. IMF estimates put break-even oil prices in the sort of $90 to $100 range. Saudi Arabia, despite some pretty rapid debt issuance earlier this year, 24 billion in the first 4 or 5 months. They still have space to borrow more, but I do think we're going to see more prioritization. We're going to see sort of more focus and a greater push for foreign investment in some of these projects. You mentioned earlier that there was interest in the Aramco issuance. There's not been as much interest in some of the mega and other projects, and that I don't think that's going to turn around anytime soon. So I think we're going to see more focus on we're going to see more focus on scaling back some of the projects. We'll see lengthening out. And also, I think there's going to be more of a focus on making sure that government actually pays their contractors, because when those arrears build up, then domestic demand starts to fall. And so I think that's going to be a challenge. It's one that Saudi Arabia can weather. But the fact that we're looking out at the global economy, we're seeing, U.S. economy still doing well, but not demanding a lot more oil. We're seeing the Chinese economy stagnating. I think this is going to be one where it's going to be harder for Saudi Arabia to sort of make this policy transition that they've been focusing on.